Welcome back. We're counting down to the end of 2024 and we're looking ahead to 2025. So JMFinancial Institutional Securities has done all the investors, shareholders a favor. They've released a report of their top picks for the coming year. In fact, they asked their analysts that, give us your best ideas for 2025. And they got more than 50 picks from the research team. And then they whittled it down to a list of 12 picks, which Venkatesh Balasubramaniam, the MD and co-head of research at JM Financial Institution, will be talking to us about. Bala, thank you very much for joining in. How tough was this, right? Because markets have done well, valuations are high. So to come out with a list of 12 stocks that you're going out there, putting your neck out and recommending for 2025, how hard was this exercise? And take us through the process, because it's hard to get picks, recommendations at reasonable valuations now.
Yeah, correct. So as we were moving towards the end of the year, we started getting a lot of queries from investors that what are the best picks for the next year. Now, there are two ways you can approach it. Either what most traditional strategists do, they go top down. Okay, we like this sector, we like that sector. Then they put suitable weightages on those sectors. They either go overweight, equal weight or underweight. And then they force find stocks in those sectors. We thought, let's not do it that way. Let's do it the other way. Let's go bottom up. So we reached out to all our analyst teams who gave us almost like 50 plus ideas. Now we had to overlay valuations. It is a fact that the market trading at almost 21 times 1 year, 20 to 21 times 1 year forward is perhaps a little bit on the expensive side. We would be more comfortable if the market was at least 20% cheaper. So it is very hard to find picks in this kind of an atmosphere. Now, so while we discussed the various stories and themes with our analysts, we also had to make an overlay of the valuations, because valuations shouldn't be ridiculous. Starting valuations have to be reasonable for you to make money in the current year. So you usually don't notice, individual stocks, P band charts or EV EBITDA charts or price to book value charts in strategy reports. We did exactly the opposite. We have taken a close look at valuations. We've looked at growth, and we have tried to find stocks which fit the growth at a reasonable price. You can't still call it a reasonable price because the markets are expensive, on a relatively reasonable price. So it was a mix of growth and trying to fit in our valuation framework on top of that to identify these picks. So when we made this overlay, we were also market cap agnostic, in the sense that we were not trying to pick out large caps, small caps or mid caps, but it has just so happened that 4 of those stocks are large caps, 4 stocks are mid caps, and 4 are small caps. So if I could name out some of these picks, on the large cap side, we basically have Axis Bank, we have Maruti Suzuki, we have Havells, and we have Samvardhana Motherson. Then on the mid cap side, we have Nippon AMC, we have KPIT, we also have Global Health. So these would be some of the mid caps. On the small cap side, we have stocks like CNDLM, we have Metropolis, and we have Ahluwalia Contracts. So these are some of the picks, and of course, Z Entertainment. So this is how we have tried to identify some of these picks, because valuations are important. Interestingly, in those 50 picks, we did have some of the more expensive stocks which were suggested by the team, but we have whittled that down and we have used this framework and identified these stocks.
Right. Venkatesh, a couple of picks, catch the attention. The first one, of course, is BHEL. While there is no doubt that ordering momentum has picked up, what is lacking is the fact that execution as well as earnings hasn't really picked up to the extent that investors are hoping. But despite that, it's amongst the top picks as far as 2025 is concerned. And the other name is Ahluwalia Contracts. Now, when you're talking about road ordering activity, that's been quite muted. So what is your rationale, especially for these two picks?
Okay. Now, I'll first answer your question on Ahluwalia Contracts. Ahluwalia Contracts is primarily a buildings and factories builder. He's less of a road constructor. Okay. So their order backlog is driven by the real estate cycle. Interestingly, their backlog at this point in time is 4 times their revenues. So there is visibility of revenues for the next 4 years, and order inflow momentum has also been very, very strong. So it is not really dependent on roads, it is dependent on the real estate cycle. That is why we are very positive on the real estate cycle. Interestingly, our real estate analyst also had quite a few picks. Our real estate analyst really likes DLF as a pick, but we thought when we put in the valuation, it has to be a reasonable valuation. We thought it is better to play real estate through Ahluwalia contracts. I hope that answers that part of your question. On BHEL, the BHEL power cycle last time around started in 2002, and possibly the cycle peaked in 2011-12. From 2011-12 till financial year 23, what we saw was a down cycle. Power cycles are long cycle plays. They are not short cycle plays. The cycle has once again started. I think last year, which is financial year 24, BHEL won close to almost $700 billion of orders. In the current year so far, they've already won another 700 billion. We believe they will win another 300 odd billion before the year closes. So you're going to have a historic high of 1 trillion rupees of orders in the current year. Order backlog at 1.6 trillion is much higher than previous peaks. Usually to build a power plant, it takes almost 3 to 3.5 years. So after the order comes through, first of all, you have to mobilize the site and then start executing. So the revenue pickup takes some time. So on an average, if you've got 100, let's say 100 rupees of orders, it takes you 3.5 years to book the revenues. So we believe that the execution cycle is just about to start. We are expecting very, very robust execution over the next 3 to 4 years. And we expect that the EBITDA, as these revenues come through, you will see a lot of operating leverage. So the EBITDA margins, which are at close to 3 to 4%, we believe it will go to double digits by financial year 27. So we are very, very positive on BHEL. Secondly, as I told you, these are long cycle plays. These are not short cycle plays. So the ordering is just last year of good ordering and this year of good ordering. It is not going to stop at that. We believe this good ordering can continue for another 2 to 3 years, because the government is scrambling. That the government does realize that if they don't do traditional coal-based power plant capex, you are staring at deficits in maybe 5 or 10 years down the line. So this needs to be done.
We had so many more questions for you to understand the rationale behind other picks like Assign, DLM, KPIT, large cap banks like Axis Bank, Havells, etc. But for another time, because we're out of time on this, this conversation at least. Thank you very much for joining in. We look forward to more such conversations.